Hi everyone, my name is Peter Pakulski. Today we'll continue creating financial model of a pharmacy business. Today it's time for us to create a final cash flow statement. There we will be able to see the profitability of business, net profit. We will be able to see the amount of financing which we need to start this business. Cash flow statement is the main table where you are able to see everything. When entrepreneurs start see the cash flow statement, the next step is creation of different amount of scenarios. They play with the inputs, they adjust the inputs, see what happens with the simple discounted payback period, if this happens, if that happens with their business idea. So cash flow statement is the heart of the business. Inside in cash flow statement you can see everything, and today I will show you how you can create it. Cash flow statement is 100% automatic form. You don't have to manually put values inside this table. The only thing you can place there is the amount of your financing. I will show you how you can do it in the next videos. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your business idea, or we can help you with creation of financial statements for your existing business to make you see a clear picture of it, of the revenues, expenses. And let's start creation. So we start with creating a timeline for the cash flow statement. So we start with revenues. So we just go up to the top of our model and search for the revenues inside the timeline. So we marked our revenues with green color. So we just take these values These are the revenues. Then we have direct costs. So we go to the top of our model and search for direct costs. So as you can see, it is an automatic form. We don't put manually values inside this table, because when you start doing something manually, you start making mistakes. Then we link our payroll. So we just search for payroll block with outputs. So we started our operating activity from May 2022. We just can go up and adjust it to, for example, May 2021. So we can see how statement, the beginning of cash flow statement changed. Now we move to fixed costs. Now we will create the block of inputs which deals with taxes. For taxes, we will add a small block of inputs. So, for example, we will have revenue tax, we will have profit tax, we will have payroll, we will have asset tax. So, for example, revenue tax, we will have, for example, 3% from revenues, we'll have 5% from profit, we have 9% from payroll, base payroll. Asset tax, for example, we will have $4,000 per month. So this will be the input, so we mark it with our specific color that goes with all of our inputs. So now we move to our taxes inside cash flow statement. We will take the revenues and multiply it on value of the tax. Then profit tax we will calculate a little bit later. Payroll tax, we will take this value and multiply it on value of the tax. Then asset tax, we will take this value and multiply it. We will go to our chronology that we've created somewhere here. Just searching for chronology. Yes, here it is. Operating activity. So we just multiply this value. 0 means that we have operating activity. We don't have. 1 means that we do have operating activity at this moment. So now we extrapolate these formulas to the right. Now we'll calculate the result from operating activity. To calculate the result from operating activity, it is the actual amount of money that you have in your pocket after your typical month. So we just take the revenues minus direct costs. It shows how your business operates itself without a loan, if you have one. Then minus fixed costs, minus taxes, and that's it. So this is the result from operating activity. Then for example we have investment. We take investment from here, from investment plan. Now we'll extrapolate this formula to the right. Now we will calculate the result from investment activity. So now we move to financing activity, equity, so this is the only line with inputs that we may have inside the cash flow statement. All other cells are automatic. So here we have loan. When we get the loan, then we place the principal payments, then we place interest payments, so now we create the line for result from investment financing activity. It is equity plus loan minus payments. So now we will create the line for cash balance at the beginning, cash balance at the beginning of the period, and cash balance at the end of the period. So the first here we will put 0 here, then then what we do to calculate cash balance at the end of the period, we take the result from operating activity plus result from investment activity plus result from financing activity plus cash balance at the beginning of the period. Then we place it, this value, we move it to the next month, to the cash balance at the beginning of the period. Then we do this way, and then we extrapolate this formula to the right. So this value goes here, this value goes here, so now we'll just hide all the blocks inside the cash flow statement. Now it's time for us to calculate the profit tax. We just take revenue minus direct costs minus payroll minus fixed costs minus revenue tax minus profit tax minus asset tax minus principal payments minus interest payments. Then we add if formula, if then we multiply. If it is more than 0, then we multiply it on the value. Now we'll just group all the block of data. So now we can see
we have our cash flow statement done. We can see the total revenues, direct costs, payroll, fixed costs, taxes. We can see the profit. Now it's time for us to calculate the amount of financing that we need to start our business idea. This will be the topic of our next video. If you find this video valuable, you may give us a like, subscribe our channel, share this video with your friends. Also, you can order a financial model from scratch for your business idea. So see you next videos. Thank you and bye.